I invest in primarily index funds. Mostly those are stocks. There are index funds that are bonds as well. Because I'm relatively young and have quite a long time horizon, my portfolio is a little geared more towards stocks. I'm looking for growth, but I do have some diversification in terms of bonds in there. But even within my index funds, I have diversification there. So I have US stocks, and I have global stocks, and I have what's called large cap. That basically just means like big companies, large capitalization. In other words, these are companies with a lot of money. And mid cap and small cap. Small cap is small business. And when we say small in this context, small is pretty big, right? Small is not like sunlight tax. I would be like micro. So one of the things that's really important to keep in mind essentially is that most investors never beat the stock market, right? People will point out when they beat the stock market, and of course you can beat the stock market, roughly 50% of the time. And what is that? If anybody here ever took statistics or just a basic coin flip study in science class, 50% of the time is chance. In other words, you're not beating the market. So most people don't beat the market, which is why, for me personally, I really believe in just buying the market. So buying an index fund, buying into indexes, which just track the market itself. In other words, when you're investing through index funds, you're buying a whole box of investments all at one time, a representative slice of every single fund available on an index, like the S&P 500, for example, which is one of my favorites. You're buying the whole thing. So in other words, think of it as buying the whole market. You're buying, instead of trying to search for and find the needles in the haystack, you're buying the whole haystack. The needles are in there. You don't have to pick them. You're just going to get the benefit of them because they're inside what you have, right?